Hello, I'm Brian Lucareli, Director of our Private Client Services Group and co-chair of our Family Offices team at Foley and Lardner. And today I'm here with Lynn Gandhi, a partner and member of our tax practice group. Welcome, Lynn.
Thank you, Brian, for having me.
You're very welcome. And today we're going to discuss how to avoid paying even more taxes, which I think will be very relevant for our audience today. But Lynn, before we get started, would you mind just sharing a little bit of your professional background with our audience before we jump into it?
Sure. So, like most tax lawyers, I didn't set out to be a tax lawyer, but that's where my interest drove me. I have been practicing almost exclusively in the area of state and local tax for over 20 years. I did spend 14 years in-house, so I have a lot of experience with practical solutions to complicated state tax issues. And I've been with Foley and Lardner since the day of the pandemic began, so 2020.
Well, good. Well, you are clearly the expert today on our topic, so why don't we jump right into it? So kind of question one, what are state and local taxes and how do they impact my business?
So much focus generally is on federal income tax that oftentimes businesses can lose sight of the myriad of state and local taxes that businesses pay. There's, of course, state income taxes, but many states have pivoted to gross receipts taxes, meaning you pay on a percentage of your gross revenue, whether or not you make a profit. And those became even more popular during the recession and have continued today. Then, in addition, of course, there's sales taxes, there's payroll taxes, there's property taxes, both real and personal property. There's state uninsurance taxes, there's estimated taxes, and even flow-through entities, partnerships, and LLCs pay a wide range of state and local taxes. And most of these taxes in the state and local area, unlike federal income tax, they're paid what we call above the line, meaning they're expensive doing business. While sales tax you may collect from your customer and just turn it over to the state, there's a lot of costs that go into properly collecting the sales tax from your customer, making sure it doesn't make you non-competitive with your competitors, keeping the accounting records for that tax, turning that tax over to the state, and then audits and such. So when we look at the burden of state and local tax and factor in the compliance cost, it gets very expensive very quickly. It's gotten even more complex nowadays because as businesses expand and do business in multiple states, most businesses are paying tax now in more than one state. You pay now based on where your customer is, not where you're necessarily located.
So great insight, and I think we do lose focus that there are state and local taxes. So simple question, but why has it become so complex?
Well, the world is not simple as we know it. Our 50 states do not follow a singular, consistent tax regime, nor do they even have consistent definitions. And so this has made state tax a little bit more like international tax planning, where you have multi-jurisdictions with different kind of tax regimes, as we call it, with different rates, with different deductions, exemptions, credits. And the more sophisticated, kind of what I would say, sophisticated buyers of tax services understand that by taking advantage of a state's regime and playing that regime off of the other states can provide very legal, above the board tax planning opportunities. I think the hook I'll offer to our listeners today is that Jeff Bezos fully understood sales and use taxes and understand that if he was shipping books to a state other than where he was located, he did not have to collect sales tax. And that 6 to 8% benefit increased his profit margin and made him really be able to compete with brick and mortar stores. And while we don't need to talk about where that ended up and how successful he has been with that, further complicating state taxes is a case law from the U.S. Supreme Court in 2018 that did away with the need for physical presence for sales tax collection. So if you're a remote seller now, if you're selling on your virtual platform to customers across the U.S., maybe Mexico and Canada, you could actually have sales tax collection obligations across the United States. And this is an area where we've gotten more and more of our family office, private equity, private investment clients are coming to us now, seeking ways that they can correct their need to start to report remote sales tax collection. And then lastly, this whole remote work situation. It used to be that you would have employees where you had your building and where you did business. And now we know that the remote work option is here to stay. And more businesses are now understanding that, again, remote workers come with a state and local tax compliance obligation that can be very expensive and costly to comply with.
Okay, so thank you. And so bottom line, and I think what's really relevant for our audience is, can I really pay less?
Yes, you can. With proper tax planning, you can limit your exposure for income taxes and gross receipts taxes. There are structural ways that you can simplify who has to collect the sales tax and how to pay the tax. We place a lot of focus on practical solutions to reduce your compliance footprint because tax compliance is a significant expense to most businesses. And also what we do is we can support in-state audits. Compliance is expensive. State audits can be even more so. The best preparation, of course, is proper preparation. So
Right.
having audit-ready files when you are aware of where you may have potential exposure, whether it's on an existing business, on a current acquisition, or on a potential sell side, will really help streamline that M&A transaction as well. And I don't want to leave with one last item, which is not necessarily tax, but it tends to fall to our state tax professionals, is something called unclaimed property. These are amounts, credits, uncashed payroll checks that unfortunately businesses have an obligation to turn over to the states. You cannot keep that found money. And this is an area that we have seen robust increased enforcement with by states. And of course, putting in a process to deal with it is something that we can also assist with.
Well, Lynn, I want to thank you for all of your professional insight today, and I want to thank all of you for watching our presentation. For more information, please visit us at foley.com under Family Offices. Thank you.